Hi, this is Kerry Artak with Wicked Stocks bringing you your daily Tesla report for Thursday, April 4th, 2024. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's take a look at the charts. Start with the big picture. This weekly bar chart, just a reminder, it's in the low 160s now, 160, 140 all week long. The channel top at 240.93 was tested in late December. Following the testing of that channel resistance, we mentioned how you should consider the 160-140 formation to be in reach within 2 to 3 months or so of testing it, and that is what played out. We did have a more clarifying sell signal on the way down that confirmed that as an objective. Since then, we've been plodding along this support, and in fact, about a month ago tomorrow, we threw off what turned out to be a failed sell signal. We did close below that 160-140 formation on about a month ago tomorrow, and it was by the required 1% margin, which we do like to keep, as a sort of indicator of the more directional likelihood, a kind of a clarifier. There's been so many times where I've seen settlements say, tomorrow at 160, 110, not below the 1% threshold of 159.78, and the market just sort of springs back. It's not considered a true violation. The analogy I've always liked to use is the rubber band. The rubber band stretches but doesn't snap, typically unless we violate it by the 1% margin. And we did so about a month ago, but the following Monday morning, we gapped right back above that formation. It's been holding ever since. And you can see it on the daily chart here, 162.03, 161.40 on the weekly chart. We've been mentioning this as a support area still has validity to buy into on a 2 to 3, 3 to 5 week basis, expecting recovery into the lower 190s, 192.39, up into the upper 190s, 198.55. 190, 164, these are the same formations, but on the weekly chart. So 190, 164 up to 198.55, which is a descending 1/3 speed line, trend-defining line study I've used for years that is based in part on the July high of last year against that recent low from about a month ago. And it would be a settlement at the end of any week above the 198.55 speed line that would set off a 2 to 3 month buy signal to 240.93. But as I've been mentioning, holding above the low 160s, you could consider this to be an attainable, you could call it an objective, but it really doesn't become underscored. It doesn't become probable unless we can close, in my opinion, above this 190, 164 to 198.55 region, which I do consider to be a 3 to 5 week target, as mentioned earlier. Holding above 162.03, that same formation on the daily chart at 192.39, a 3 to 5 week objective. And that pretty much simplifies it. I'll get to the downside here today because we're coming into the end of the week. And if we do happen to close tomorrow, the week itself, below 160.51. That is the low that was put out about a month ago. That would also be below 160.140. If you want to add 159.78, you have my blessing, but we did that once before about a month ago. I do think the pivot point now to the downside would be a weekly settlement below 160.51. Then expecting this long-term trend line, 4-year trend line at 136.74 within 2 to 3, 3 to 5 weeks, and over the following 2 to 3 months, 101. 101.81. So if we close tomorrow below 160.51, I would expect 101.81, that January 23 low, within about 2 to 3 months. Yes, there is double bottom potential here, but I'm going to leave it at that. I don't want to get too deep in the weeds on 101.81. So let's talk upside actually for the day itself. We do, of course, have the 162.03 formation. We are expecting the low 190s over the next 3 to 5 weeks. On the way up, we do have 171.29 as a 3/8 upside Fibonacci over the last week and a half. That is that high from about a week and a half ago against this week's low. It can contain intraday buying pressures if you look over here to the right. By the way, I don't know if you're familiar or not, or if you know it, you can download this PDF file that I'm using for the video every day. We actually have it available on our website, and I think even on our YouTube channel, if I recall. Anyway, let's continue with the analysis. If we push through 171.29 today, or perhaps even open above it, a 176.56 is likely within the day. 176.56 is a 5/8 Fibonacci over the last week and a half, and it can contain daily buying pressures. I don't think much more than that. I would not sell 176.56 as a 3 to 5 day swing trade. I do think, having come off of long-term support, which we are in the process of doing, it looks to me anyway like we are. I mean, we have the weekly low was put out on Tuesday. Wednesday was a modest recovery day. So, it does look to me like we're skewing upward, as would be expected, above 162.03, 171.29 in reach. It's a day tradable level for aggressive day traders, but pushing through 171.29 wouldn't surprise me today, and if so, 176.56 in reach, where we can place a daily high. If we close today above 176.56, within about 2 to 3 days, I'm expecting 185.51, which is, by the end of next week, converging with our objective anyway. So, it's another way of saying that if we close above 176.59 within several days, we push into what really will be a narrowing zone of a sellable resistance. 192.39 is the more significant, and I could stair step it all the way up, which I don't like to do. I don't want to encourage selling at 185.59 and 51, and then selling again at 192.39, and then selling again at 198.55. And I don't like to get too deeply personal in your trading style. Everybody's a little different, and they have their own time horizons, their own methods for risk management. But let me just put it this way. Closing above 176.56 rather, within 2 to 3 days, I would expect 185.51, where we could actually top out through next week, fall away from here for 3 to 5 days, back at it once it converges perhaps with 192.39, so forth and so on. Yes, if we close any week above 191.64, that is a solid buy signal, but I would rather wait for the double buy signal, which would be a settlement also above 198.55. That's not going to happen tomorrow at the end of the week, but it may well happen over the next 2 to 3 weeks, and if so, 240.93 becomes our next big picture objective. I do think as we're testing this low 160s, if you're an options trader, you could reach for 195, 190 strike out of the money calls that don't expire. I would go a couple of months out on the expiration. You could also consider reaching for 230, 235 strike out of the money calls that don't expire for at least 6 months. You might go a year out on that, because that is also in play, and it becomes verified, if you will, following a settlement above 198.55. Inversely, it's probably the last thing I'm going to say, if we settle tomorrow below the 161.40 formation, and you should, I think, throw in the 160.51 low from a month ago, if we settle below that, any calls you may have bought in anticipation of 3 to 5 week rally or 2 to 3 month rally should be liquidated. And in turn, 3 to 5 week swing traders might reach for 137 strike out of the money puts that don't expire for at least a couple of months. That's a 3 to 5 week swing play. You could also consider reaching for 102 strike out of the money puts that don't expire for at least 6 months, because that would be our 2 to 3 month target if we close tomorrow, the week itself, below 160.51. Until then, stay aware of the fact that we are testing and have been testing long-term support. This market prone, as long as we're above 161.40, to reach into the 190s over the next 2 to 3 weeks and into the 220s, 230s over the next 3 to 5 months. I say 220s, 230s because 240.93 0.93 is dropping on a weekly basis. I think I pretty much rounded it out. I'm going to leave you with this image for the day. Please click like, share, subscribe. Check out wickedstocks.com. I'll be back tomorrow with Friday's Tesla, and you have a great day.